Morning viewers and welcome to the channel. My name is Shannon Rivkin. This week's video will be discussing Magellan, and title here is "With Global Markets Continuing to Rally, What is Going On with Magellan Financial Group?" First thing I'll get into is a chart of Magellan versus the ASX Accumulation Index since 2018. Apologise, there's no dates along the bottom, but it's pretty much guess that this is the beginning, early 2020, and you saw here in these 2018 and 19 periods where Magellan really started to outperform the market before obviously the pandemic hit, and then we saw a recovery here before kind of a steady, decline before slight bounce there, but overall a pretty significant decline when compared to the broader market, which is from its COVID lows just almost pretty much had a straight line up since then. So what's really gone on? It all ultimately comes down to performance of their underlying funds. This is a company that had, long-term performance well above its benchmarks on every metric you could think of prior to 2020. Although I should say, coming into 2020, that you started to see at least signs that their performance was starting to disappoint, and that's continued into 2021. As I believe over the last 12 months, they have only 1 month that is 1 month performance for their flagship fund that has exceeded the benchmark with the other 11 below, and I think 20% or so underperformance for their flagship fund, which is obviously pretty poor. The issue for a company like this is, attracting the amount of institutional and retail fund flow that they have over recent years, and therefore attracting the market multiple that they were, as understandably the market was assuming that their growth would be, considerable and continue for, into the future. We're getting to this point now that we're starting to see fund inflows slow down quite a bit, and the question is whether we're going to start to see it now reverse. And I'll go to the next chart here. It's an amazing thing you have in the funds management industry, and I'm showing a chart of Platinum Asset Management. And what I mean by that is that when you have the trust of your investors and your performance is good, you get positive press coverage, institutions and financial planners are backing you, and everything is very good and very easy. And it's very easy for you to continue to attract new funds under management, while of course your underlying funds that you're investing are performing well. And then you'll get those big market multiples. And then you go through a period of underperformance and things can turn very quickly. And I think Platinum's a really good example here. When they listed in 2007, I think it doesn't show it here, but I think on the first day traded from its listing price as high as $8 or so, before coming back quickly. And then, almost at that time, because, they listed understandably when their performance had been so good for so long, it almost marked an inflection point for their performance. And since then, they've performed pretty poorly over an extended period of time. Again, their flagship fund, in particular the international fund, has just been really weak, at least compared to its benchmarks over an extended period of time. And you've now seen, coming into COVID, we've seen falls here and then recovery, and now back to the same, where the market is starting to discount it because it's not attracting big institutional retail inflows anymore, and you can't bank on its performance either. And that's really the risk we're looking at with Magellan. It's certainly not as expensive as what it once was. I believe it's trading at 12 times forward multiple, which is certainly very cheap compared to its historical multiples. But as I said, we're at that inflection point. If its performance continues to be poor, and we start to see its fund inflows reverse, and we start to see actually money coming out of their coffers, that could be a dangerous thing. And I should say as well that they've also made a pretty high-profile move into private equity-style investing with their investments into Guzman y Gomez and Barrenjoey, which may ultimately pay big dividends, but at least the early returns are out. And they're, I guess, back to here, they're testing the market's patience right now and testing the market's faith. So I think if you start to see performance turn around and they start to outperform benchmarks in the near term, I think you can be confident that the performance of this stock is going to be a lot better, and we might still see the stock return to new highs over time. Short of that, though, if the recent performance is an indicator of further performance below that of the benchmarks, I would be concerned that there is still downside ahead on this one. Because as I said, if we see funds under management fall from their, $115 billion or so under management now, that can become very, very slippery slope, as it has been for platinum. So while it looks cheap today, I'd say I'd reserve my judgment on buying it based on the next 6 months underlying fund performance. And if that starts to look better, I think this one could be a good buy. And I should say that is it for this week's video. Thank you very much for tuning in. If you did like the video, please click like and subscribe, and I'll be back to you with a new video next week.